let's go and get started with today's training. All right. So now our system's objective is to get you and your family completely and totally and utterly financially free in the next 3 to 5 years. We like to start each of these trainings off not only with a quick mental vacation break, but a little review. That way, if you're watching our training for the first time, we can kind of get you caught up, all right, at least with the big picture, okay? Now, we're going to do that by leveraging the largest financial market in the world, known as the Forex, or the foreign exchange market. And we're not going to try to teach you how to trade. We tried that a long time ago. We don't feel that that's going to work for the average person. So instead, you're going to be able to leverage a 100% hands-free, fully automated trading platform. You'll set up an account with a reputable broker in your own name. You don't even have to break the bank. You can start an account with as little as, depending on how you're funding it. If you're funding it with Bitcoin, for instance, your minimum is just 350 euros or Great British pounds or dollars or what have you, okay? You're never going to have to take the trade. You're never going to have to learn about indicators and charts and what have you. What we are going to do from our standpoint is we want you to understand it as you undertake it. So what I want you to do is I want you to clear off all distractions and make sure that you're watching today's training on your best device. All right, so here's our target, ladies and gentlemen. We want to generate respectable annual returns. When we say respectable annual returns, we're talking double digits. 10%, 12% a year would be a respectable annual return in traditional investing terms. We want to do that, however, we want to do that on a monthly basis. Now, is it going to happen like that perfectly? No. Okay. It's more likely to have a situation where maybe 1 month we're up, 22%. All right. And the next month we're only up, 3% or 4%, or we might be up 30% 1 month, or we might be down 5% the next month. What we want to do more specifically is we're targeting an average net return of 12.5% per month. Can we promise that? No. Can we target that? Yes. And that's what we are targeting. If we can do that, then we can compress time frames. All right, if we're looking at a traditional investment, and let's say that traditional investment on an annual basis gets, let's say on average 12%, but we're able to do that on a monthly basis, that's our target, can't promise that, then 1 month of returns could produce a year's worth of results in traditional investing. So we want to condense 1 year down to a month, or we want to condense 12 years in traditional investment standpoint down to a year. If we can average 12.5% per month, then we can condense 12 years worth of traditional investment gains into a year. We've got to compress time frames with most of our account holders, because most of our account holders got started later in the game, meaning they don't already have a lot of money, they don't have $1 million of investment capital, or they don't have 42 years if they want to sit around and wait. If we were doing something like dollar cost averaging, or not even dollar cost averaging, if we would just, if we got started at 23, for instance, and you had $10,000 and you made 12% a year, well, by the time you hit 65, you'd be a millionaire, but it'd take you 42 years. We want to compress those time frames. We want to take 36 years worth of traditional investing gains, and we want to compress it into 3, or take 60 years of traditional investing gains and compress it down to 5 years. That's why we call our system 3 to 5 years. Now, here's what we're going to do. I want to introduce you, or at least share with you, some of the methodologies of one of our traders. This particular trader, the last 17 months, he has had a losing streak. I'm sorry, not a losing streak, a losing month since February of 2018. And when he experienced that last losing month, it was less than 2% that he was down for the month. Since then, March 2018, I'm cutting this video in July of 2019. He's been on a consecutive winning streak, month that is, all right, not trades, but up double digits each and every month since March of 2019. Past performance, no indicator of future results. We'll bring on our disclaimer king in just a few moments. What we're also going to share is that he has withdrawn from his own personal trading account well more than $1 million over that time frame. Well more than $1 million of trading profits over that time frame. But since I just gave you big numbers, we've got to go to our disclaimer king. Once we come back from our disclaimer king, then we will share with you a little bit of his trading methodology. We'll be right back. Here is our disclaimer king.
Welcome. I am your disclaimer king. Please pay attention to this very important disclaimer. While our system is designed to get you completely and totally and utterly financially free in the next 3 to 5 years, trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high degree of leverage can work for you, but can also work against you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all of the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Today's training will introduce a fully automated 100% hands-free Forex managed account. This is referred to as a PAMM account. While the system is automated and 100% hands-free for you, it is manned by real Forex traders. This PAMM account is not registered with any US regulator, NFA or CFTC. In turn, products or services in our Forex system are not intended for residents of the United States. Information and services through our website and training are accessible worldwide. However, it's not directed at residents in any country or jurisdiction where distribution or use would be contrary to local laws or regulations. The responsibility is on the individual or entity to seek professional advice with local laws or regulation based on residency or jurisdiction of that individual or entity. Now, back to my training partner for today's training. Happy trading.
Okay, ladies and gentlemen, we are back. And again, I want to make sure that we're clear on this. We're recording this before we have launched this 3 to 5 year system to the world. We were in a beta phase for about a year. And in beta, you find out a lot of very valuable information. You find out what works. More importantly, you find out what doesn't work. We're going to be launching this system to the world in August of 2019. By the time you're seeing this, then this means this system is now available to you. Now, you're going to be able to choose as you come inside. You're going to be able to leverage a couple of trading accounts. In time, there'll be a third and a fourth and a fifth and so on and so forth. We call our accounts by the name of a predatory animal. Our favorite animal is the lion. And there was a movie called The Lion King. Many of you probably saw it. And the main character in The Lion King is Simba. So we call one of our accounts Simba. Now, this trader we're about to talk about trades right now exclusively in the Simba account. It may be down the road. There might be some other accounts that he may trade in, but he trades exclusively in the Simba account. We also have an account that we call King Cobra, and we've done a training on the trader that trades in the King Cobra account, but we're going to focus on the Simba account today. There are 2 traders in the Simba account, and we're going to focus on the Euro King. We did a previous training where SB, all right, that stands for Eats, Sleeps, and Breathes. It's another trader who trades also in the Simba account. All right, so the Simba account is going to also feature a trader that we like to refer to as the Euro King. So we may say for short EK. All right, so you'll know that we're talking about the Euro King. In times past, we've also referred to the Euro King as a millionaire trader. Now, the reason we call him the Euro King is that he trades primarily the Euro US dollar. There's a lot of different currency pairs out there, but he is really laser focused and trades primarily the Euro US dollar. I would say that probably over the last 12 months or so, that may be all he's traded. And the reason that's important is because if you limit the trades to one or two or maybe three currency pairs, you're going to get to know that currency pair a lot more intimately. So he trades primarily the euro, US dollar. He trades millions of dollars. All right, he trades millions of dollars. He's got a number of accounts that he trades. But what we have seen is that we've seen from his statements, he has personally withdrawn over $1.3 million in profits in the last 17 months. Now, that's from one account that he's shown us. That's from one account that he has shown us. In that particular account, he does trade a large amount, all right, somewhere between about $500,000 if we were going to denominate it in US dollars, somewhere between $500,000 and about 750, 800,000 or so. But what tends to happen is every 30 to 45 days, he withdraws profits, and it's not uncommon for him to withdraw profits of $100,000, $145,000. I saw on one recent, it may have been $147,000 in one recent withdrawal. Okay, so this is not just some Johnny come lately to the market. This is someone who is again quietly building a fortune with his own trading. He's had 17 consecutive winning months as I'm doing this particular recording. And out of those 17 months, all right, and again, I'm saying that from March 2018 through July of 2019 as I'm doing this recording, he's also had 3 of those months where he recorded gains of over 50% for that particular month, okay? So just this trader alone has the potential, maybe perhaps all of our disclaimers, of helping us to hit our target of a net of 12.5% per month. That's our average. Now, he uses an averaging approach. Well, what does that mean? Okay, if we were to look at the stock market, we will often inside of our portal give you stock market analogies because the Forex is a newer beast for so many folks. Many people are not familiar that much with the Forex. And so what we find in our teaching is that if we correlate it to the stock market, most people at least have a conceptual understanding of how things may work in the stock market, okay? All right, so here's a cost average stock market example. Let's say that you bought 100 shares of ABC stock, whatever ABC stock happens to be, and you paid $10 per share for that stock. Now, if you bought it, you want it to go up. So the average cost in this example, or what some folks would refer to as your cost basis, is $10 per share. Now, you want it to go up. You bought it at 10. You want it to go up, but it doesn't go up. It goes down. And it goes down to $9, and you decide, well, you know what? If I like the stock at 10, I love it at 9, let me buy some more at $9. Now, if you bought the same amount of shares at $9, then what would happen is you'd pick up another 100 shares. So now you've got a total of 200 shares of the stock in this example. But what's your cost basis now? What's your average cost? Well, it's not $10 because you bought 100 shares more at $9. And when you do the math on that, your average cost is now $9.50. Now, what would be the purpose of someone engaging in a dollar cost averaging situation like this, okay? It would be to lower the cost basis, to lower the overall average cost. So now, if the stock came off of $9, so you bought some more at 9, got back up to $9.50, you'd be, I'm not factoring in commissions or anything like that, you'd be at a break even. And if it got to $9.51, again, not factoring in anything else, you'd be at a very slight profit. If it just got back to the same $10 where it started, you would be profitable, okay? Now, let's say the stock doesn't get back to $9.50 right away. It retreats back to $8. You buy another 100 shares, and now your cost average is down to $9. It retreats down to $7. Now your cost average is down to $8.50. it retreats down to $6. Now your cost average is 8. Now this is significant, and here's why. When you bought the stock in this example at $10, and now the stock has gotten pummeled down to $6, the $10 stock, or the $10 price that you paid, all right, those shares you bought for $10, they're down 40%. Yet, because of the dollar cost averaging, your account in this example wouldn't be down 40%, it would be down 20%. Why? Because by the time you purchased at $6, the average cost is now $8. All right, so the average cost is now $8. Now what that means is you've got stock that you bought at $6 that's wildly profitable if the stock gets to $8, gets back up to $8. You've got stock that you bought at $7 that's very profitable if it gets back up to $8. You've got stock that you bought at $8 that would be at a break even if it gets back up to $8. You've got stock at $9 that would be underwater, all right, would be at a loss if it got back up to $8, and let's say if you sold it at $8. And then your $10 stock would, or shares, all right, that you purchased for $10, they would still be underwater, okay? The whole idea of averaging is to lower your cost basis, all right, so that as things retrace, as things rebound, you're able to get into a break even and then potentially into profit without the asset having to move as much. It doesn't have to go from $6 all the way back up to $10 in order to be at a break even or to move into profit. Okay? So EuroKing uses this approach, this dollar cost averaging or this averaging approach, and he does it with the euro US dollar. Now let me tell you why this is so important. What you're looking at is about a year's worth of trading activity. Now each of these, what are called candles, represents one trading day, one 24-hour trading day, one 24-hour trading period. The red candles represent the fact that the market for the euro US dollar, the euro was down relative to the US dollar that particular trading day. The green candles represent that the market was up that trading day. Now there's one thing I wanted to do on this chart, so let me go and grab a drawing tool so we can highlight some very key points. I will be right back. Okay, so I'm back with our drawing tool here. Now what this shows us, and again, we're not going to try to teach you about indicators and all that good stuff. I just want you to conceptually understand it as you undertake it. So here's the euro US dollar. And the one thing that we can see over the last 12 months or so, this is about a year's worth of trading activity, is that the euro US dollar has traded in a trading range. The euro US dollar is the world's most traded currency pair. And so you have more money coming into the euro US dollar with the big banks as well as retail traders like you and me than any other currency pair. And as a result, it doesn't often go on these long drawn out trends. It tends to trade within a range. So you can see here, I'm just kind of drawing, let's call this a box. It's kind of trading in this box, and you can see that it goes down and then it goes back up and it goes down and it goes back up and it goes down and it goes back up and it goes down, it goes back up, it goes down, it goes back up, it goes back down, it goes back up, it goes down. Now it is in an overall downtrend. Okay, it is in an overall downtrend, but in this downtrend, there are plenty of times where the market comes off of a bottom, for instance, and it goes up, and it retreats back, goes lower, and it goes back up, and it retreats back, all right, and it goes back up, so on and so forth. So what EuroKing does is EuroKing, because this is primarily the currency pair that he trades, all right, he's gotten really good at pinpointing times to perhaps get into the market to the upside or get into the markets for the downside. But even with that, he's not going to be 100% correct. What happens in the market is, in most cases, when we get into a trade, the market immediately goes against us. All right. Part of that is because there's something called a spread that you're going to always have, or commissions, or what have you. Okay. But part of that is just the market. All right. But one of the things that EK, Euro King, can count on and typically plots. All right. I'm not going to get into all the indicators as to what he's using to get in. I don't know all the indicators. Okay. Some of the things are his secret sauce that he's not even going to share with us. But he counts on retracements. All right. And that's where the dollar cost averaging comes into play. So if we get into trades and those trades are going against us, that's where he's going to use the averaging approach. So let me show you this real quickly. Okay, so let's take this these couple of candles here. All right. Now, without trying to give you a trading lesson, this red candle here was indicating that we could go lower. This red candle here was indicating that we could go lower, and we can see that at the end of this candle, all right, the candle closed right here. It went as low as this during that trading day, but it closed right here. We can see that there have been times where the currency pair did go lower than where it closed. It went lower here. It went lower here. It went lower here. It went lower here. All right. So it would have been a reasonable assumption to make that, hey, we could be headed down lower. And so perhaps Euro King would have gotten us into a sell trade, anticipating that the currency pair was going to go lower. All right. And so let's say that he did that right here. Okay. Now let's go up just a little bit at the close of this particular candle. Let's say that as he's doing his analysis at the close of that candle, things are suggesting that the market could go lower, perhaps even lower, and he gets into some sell trades. All right, so let me get rid of this for just a moment. Okay, all right, so let's say that he sells right in here. Now, if he's selling, what do we want it? We want it to go down and down and down. We want it to burn, baby, burn, go to Hades. That's not cussing, is it? I hope not, okay? But notice that the market went up that day, all right, for this particular trading day. So maybe he took another position to cost average, and it continued to go up. Maybe he took another position to cost average, and it continued to go up. Maybe he took another position to cost average, okay? It did come down the next day, but maybe he hadn't hit his profit target, and then it immediately started to go back up. So maybe he took another position, and another position here, and another position, and another position, and another position. Well, now all of a sudden, he's got all of these positions, but they're underwater. Why? Because we want it to go down. We want it to be lower than this, where he originally got in. But now the market is way up here. So this trade and 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 this trade right now are underwater. But he knows that ultimately there's going to be a retracement. And when that retracement comes, that some of these positions that he took up here, let's say if he took a position way up here, now all of a sudden when the market starts to go down, now this position that he took up here is in profit. This position he took up here is in profit, and it continues to come down. Now all of a sudden this position, I'm kind of checking the ones that are in profit. Now all of a sudden it continues to come down. Now many of these positions are in profit, and what he may wind up doing is he may wind up closing out the trade down here. So maybe this trade still is underwater. Maybe this trade is slightly in profit, or maybe a little underwater. But overall, the family of trades, we like to refer to it as a trade family, the family of trades closes out profitably. Now, I will say that sometimes this takes some time. So we're going to be in trades with Euro King typically for a few days, sometimes even a few weeks. And this is one of the reasons why he'll do a withdrawal normally every 30 to 45 days on his end, because typically we're out of a trade family within a few days to a few weeks. There might be some occasions where we might be in that trade family for, a little more than a month or what have you. But again, we've got 17 months. The last 17 months, he has not had a losing month. Now, keep in mind, he hasn't been trading for us for 17 months because we're just launching this out to the public, okay? But the last 17 months, he's had no losing months. Of those 17 months, he has averaged double digits. So imagine 17 months of average double-digit returns, and in those 17 months, 3 of those months, he has hit 50% or higher for the month. Past performance, no indicator of future results. Give me just a moment and we'll start to close out today's training. Okay, so remember, inside of our portal, if you don't have our portal yet, you're likely going to have a call to action button, or at least get back to the person that sent this training to you so you can get access to our portal. It's absolutely free. There's no monthly subscription. There's no annual subscription. Now, it's not free to us. It costs us for every subscriber to our portal, whether you fund an account or not. But we wanted to lower the barriers to entry, particularly because we have a global following. And we may have folks that are in parts of the world where 300, 400, 500 US dollars is a big part of their monthly income, or might be, all their monthly income. So because of that, we've got low barriers to entry, but don't discount this system because we've got low barriers to entry. Let's say that you had $10,000 that you were trading, and that needs to be, whether it's 1,000 or 350 or 35,000 or 350,000. It needs to be risk capital, money that you can set aside. You don't have to touch it. If you lost some or all of it, none of us would be excited about that, but it would not impact how you take care of your family. $10,000, if we were able to average 12.5% per month, obviously we've already done our disclaimer, over a 4-year period in this example, look at what that could do. All right, it would take about 42 months, averaging 12.5% on the spot net, for you to become a millionaire. We'd love for you to become a multiple millionaire with our system. Get this, boy, we would love this to happen for you. Let's say you now have a couple $1 million trading across your number of accounts. By that time, you'll have more than 2 accounts, all right, and you'll even be stretched across different brokers. But let's say that happens. We'd love to have you in a position where now you can take a large chunk, not accounting, we're not accounting for taxes because we don't know what jurisdiction you're in, and we're not tax people anyway. Let's say you took out $1 million and you put that in more of a traditional type of investment, something that is less volatile, because the Forex is going to be more volatile, all right? So we ultimately want to position you where you can have that more traditional investment. Remember, we said traditional investing works, but it works best when you what? Already have a lot of money, or you have a lot of time. Well, if you had a couple $1 million, could you take out $1 million and put that somewhere where it's going to still earn you a nice, decent rate of return, but not have the same volatility, so that you now, you answer the money question. That's what we want to do with this system in the next 3 to 5 years. Don't have $10,000? Well, maybe you do 1,000. We'll extend this to 5 years here. Look at what 1,000 could do in 5 years, assuming we hit our targets. We can't promise those targets, but those are our targets. Now, what if you had $1 million in your trading account and we had a net month of 12.5%? Well, that would be 6 figures. That'd be over $125,000 for the month. Okay, and then if we had a smaller amount that maybe you were looking to start with, let's say you want to fund with Bitcoin and you're going to do $350. Let's just stretch that out 1 more year and look at what this could be. This could still make you a millionaire. 3 to 5 years, 3 to 6 years.